Very active day in the markets today. I wanted to take a look at TLT stock. Anybody who's been following me for some time, right around April, I started buying in on that latest dip. Once I saw the economic data coming through that showed that interest rates more likely than not will be moving lower. I got enough proof. I bought on that dip. I've been buying TLT stock roughly around 87.5 was my low point and bought a few levels up from there. TLT stock backed off a little bit because we hadn't seen the information that we needed to that gave the confidence for the Federal Reserve to lower interest rates anytime soon. We got data today. 0.117% is the month over month increase for the core inflation rate. This, of course, sent U.S. Treasury yields lower, much lower. TLT stock moved higher. I've still not added any more into this position, but I do believe we've seen probably the lows that those are in place. And eventually I am going to buy in a few more uh, levels here and there. We're still at about 3.2%. Let me check on that. 3.26% year over year. So we went from 3.41% dropped down on the inflation, the core rate, to 3.26%. So it's about 0.1.5% lower. Not quite there. And this is really kind of shifting my thesis over the past couple of weeks. I've been saying some things. We're going to get there. The Federal Reserve will get there with lowering interest rates, but it's not going to be a fast pace. I've got some charts I want to show you, kind of explain my thinking on this. I do believe TLT stock will continue to move higher over the longer period of time, but eventually will likely soar because I believe that the Federal Reserve, although they're probably being prudent not moving interest rates yet, they're going to be in a rush eventually because I think this economy is going to slow fast. Let's jump in. Start off, here's your month over month change for core CPI. 0.117 was the month over month, not the lowest we've seen, obviously, but moving in the right direction. If you multiply 0.11 times 12 for a full year, if we continue to get this would be below the Federal Reserve's 2% target rate. So this should give them some fairly strong confidence. The Federal Reserve does not look at CPI data. They look at the PCE data point. We'll get that in about 2 weeks. The two are fairly heavily correlated, not a perfect one-for-one correlation, but it gives us a good idea as to the information we're going to get at the end of this month. So it's sort of a sneak peek for the markets moving ahead. Here is the annual change rate just at 3.25%. We went from 3.41 to 3.26, so about 0.15% decline on the annual rate. You might have seen that in the headlines. Moving in the right direction. And I expect that this will probably start to sort of landslide much lower. And if you go backwards to January, February, March 2021, you can see how there were some big jumps up higher. I think this is probably what we're going to see, but not just yet. More than likely, and this is kind of the shift that I'm taking with my analysis. So I start my analysis with the consumer. What are they earning? How many of them are being hired? And what are they doing with their money that they're earning? This really drives the demand cycle within the economy. Governments tend to be flatlined. They don't necessarily hire and fire on a regular basis. Stimulus will, of course, push that. Businesses respond to consumers, can potentially perpetuate some things. But largely, if you look at the rate of growth of consumers who can get hired and fired, no moment's notice, this is what really propels growth or deceleration, contraction in the economy. And price pressures and employment are both lagging indicators. They move hand in hand, but it's all driven by personal incomes and then consumption. So what are we looking at? I think from my perspective that we're going to see this slow attrition and then all of a sudden there's a cliff. And at that point, the Federal Reserve is going to be in this massive hurry. They should have enough confidence right now with the information that they have that, yeah, beyond just merely talking, they can probably take action. Maybe we do see something happen in December. That would probably be a solid move at that point. Here is a look at core personal consumption versus core consumer price index. The blue line is what really kind of drives the economy, and I explained that earlier. Individuals earn their income, then they spend it almost instantaneously. This really drives everything. But you can see core CPI is delayed. It takes a while for price pressures to build up, whether they be heading higher or lower. And you can see some of the normalized delays we've seen outside, of course, all the spikes we saw during COVID. Same thing with employment. We're starting to see gains in unemployment. We crossed the 4% mark just, last week, Friday. This will accelerate as well. It's going to sort of inch, then all of a sudden, whoa, that was a big number. So the markets themselves right now, of course, bond yields have fallen. Let me move to the bond yield. Here's a look at the U.S. 10-year Treasury yield. It's fallen below the levels it's been sitting at. It's crossed below the 4.2% mark. And this goes back, this is the 4-hour bar chart, so it goes back a couple weeks. My take on this is that we'll probably, I had a tough time seeing 4.75 again. I think 4.5. We almost touched it just the beginning of this month, and I thought that was sort of a long shot. Now that we're well below 4.5, I don't see any reason why 4.5 on the 10 would print. Now, I trade TLT stock. Let's move to that. TLT stock, of course, trades off the 20 and the 30 on the Treasury yield price. All right. Take a look at here. Now, the 10-year that I just showed was below the latest price movements, but TLT stock, of course, didn't quite cross the high mark. Now, these would be completely inverted. One of the main reasons, got to get that money. The people who run the good TLT stock, of course, are getting their cut, and this slowly, there's an attrition in the actual price, but it's not that, it exists. It's not a huge number. My position on this is probably going to be several months. I'm also actively getting in there, selling options to kind of bring in the extra premium that I'm losing out on because of any kind of attrition on the price versus the actual yield. We should cross 94.5 at some point. There's enough information that the Federal Reserve could move forward. TMF stock, of course, this is one. It's very similar to TLT stock, but it's something like 2.5 times more aggressive with percentage. That one should also kind of move forward. The stock market today, interesting. The Dow DIA stock, if you looked at that, it's up today. NASDAQ, aka QQQ stock, getting slaughtered. SPY stock, and this is what we're looking at, kind of stuck in the middle. They're following more QQQ than it is DIA. It seems that what's happening is the bigger seven are just getting offered hard, sold off. My take on those is and has been they're overpriced already. So valuations are going to shift, but the consumer themselves is also shifting. Just because we're getting price pressures kind of easing, allowing the Federal Reserve to ease back on its aggressive stance right now, policy restriction, the economy is not going to be moving forward. Just the opposite. The economy at this point is starting to contract. And as I mentioned in the intro, sure, we crossed 4% on unemployment rate. We're crossing below the what could be 2% on annual inflation rates. But this is all going to be driven by, of course, an economy that is slowing down. We will see unemployment numbers rapidly increasing. So the fact that we're seeing bond yields fall, it's more of a reaction than it is a positive, hey, everything is status quo, we're just moving forward. No, not at all. This economy is beginning to contract. And those stocks that are overvalued, those individuals who've been chasing yield, they're getting offered. I don't believe those stocks should have been at those levels. I've been saying that. Have I been right 100%? I haven't been trading those, so it's not really a position that I had no skin in the game on that. But I sat there and said I wouldn't buy, wouldn't sell either because they're overpriced relative to what they can offer investors at the same time in an economy that is constricting. At this point, my position on TLT stock remains the same. I'm going to keep holding. I might start buying a little bit more. I'm going to see a little bit more data. I'm putting a lot into this, but I already have a big chunk of what I'm doing in there. At this point, I'm going to be managing it, selling some options. I'll looking to sell TLT calls for next week expiration. Just bring in some premium. Let the TLT stock just sort of move sideways if it would over the course of the next few days, and I'll bring in that theta all day long. Long-term TLT stock, TMF stock, they move higher because the Federal Reserve will be in a position where they have to lower interest rates. And I believe it'll be about 4, 5, 6, 9 months. They're going to be moving fast to dump their interest rate policy. That will push TLT stock up much higher very rapidly, 4, 5, 6 to 9 months from now. We'll continue to, they're probably going to take a slow stance in lowering their interest rates, but eventually I think that they're going to be in a massive rush. And the stock market, I believe we've probably don't have a lot of reason to be buying anymore. Today's offerings that we're seeing in that Magnificent Seven is sort of the beginning. August 15th, I think, is the date that NVIDIA prints, and I don't believe they hit. And because of that, things are going to get ugly. Regardless, I'm going to hold on to my position on TLT stock, and this is something I plan on probably going to be sitting on for at least probably 6 to 9 months. Make sure to hit that like and follow button. I'll break down the economy and how that affects bond markets and stock markets. We'll see you in the next video.